Problem number 6. It's the equity method, 80% interest, and apparently we have to do a worksheet and financial statements. All right, Standard Company prefers the following balance sheet, January 1st of 2015. So here's the beginning of it. I'm obviously missing some stuff. And it's January 1st of 2015. And I'm missing land for 75 and buildings for 350. And then over here on the liability and equity side, paid in capital in excess of par is 120,000. So I'll add that in when we do the papers. All right, this is on 2015, January 1st of 2015. On this date, Prescott Company purchased 8,000 shares of Standard Company's outstanding stock for a total price of $270. Also on this date, the buildings are understated by 40,000 and have a 10-year remaining life. Any discrepancy between the price paid and book value is attributed to goodwill. Since the purchase, Prescott has used a simple equity method to record the investment and its related income. All right, Prescott Company and Standard Company prepare the following separate trial balances at December 31st of 2016. So all of 2015 went by, and now it's 2016. All right, prepare a value analysis and determination distribution of excess schedule. Then the worksheet, and then the financial statements. So a little bit of everything, simple equity method. All right, let me make this smaller. I already have this going. All right, I'm going to go ahead and type this in since I don't have it all here. So we kind of have it. Current assets. Land, building. Accumulated depreciation. 50, 75. I said for building 50. And accumulated was 140. So that's net of 210. Kind of need to remember that. Over here we have liabilities of 140. I don't know if they're current or not. It doesn't really matter. Common stock, paid in, and retained earnings. 100. 120. And this is interesting. It has brackets around it, so it's actually a deficit. And it has a debit balance when it should have a credit. So I'm having to do it opposite of what it should be. All right, and then the buildings are understated by 40. So this is going to be, this nets to 210, right? 350 minus 210, and then add 40. Is that right? Oh, sorry, this should be minus 140. There. This is 140. All right. The rest of this stuff just carries over. But not the accumulated, because we netted it. We did market value. Okay, so I paid 270 for 80%. It doesn't tell us anything about the NCI other than that, so I'm just going to divide this by the 0.8. Did it say we bought 0.8? Did I make that up? It's set up there. But I could figure it out that it was 80% because common stock is $100,000 and it's $10 par. So they have 10,000 shares outstanding, and I bought 8,000 of them. So I bought 80%. And subtract. All right, fair value of net assets is going to be the 375 minus the 140. Will be what's left. All right, so there's the value analysis. D&D, we'll copy this down. This is going to be 100, 120, and negative 25. Subtract. Here's my excess. It's just the building. 40. And then goodwill should be 102,500. That makes it balance out, so we're good. All we had was the building. Building, 10-year life. So 40,000 divided by 10. I'm going to do 4,000 this year, and we've done 4,000 last year. All right, so we can go look up. I'll go down here and do it. The internal generated is going to be the sum of these. So 120, 50, and 45. Or subtract them or whatever. 20 minus 50 is 45. And then they get 4,000 comes out of that. They get 20% of it. And we get the rest. All right, our internally generated net income is going to be 360 minus 179 minus 120. All right. Now I need to do all the eliminations. Okay, let's see. So I'm going to do CY1, sub income, and credit the investment. And it's this 20,000. I also need to eliminate the dividends. So CY2 back in the investment and take it against dividends declared for the sub. It's just going to be my 80%. So 5,000 times 0.8. Oh my gosh. Oh my goodness. Alright, then EL is going to be common stock sub, paid in of the sub, retained earnings of the sub. Right, all at 80%. And then the investment. So 100, 120, and a negative 15. So 100 times 0.8, 120 times 0.8. Oh, this is going to be a credit. It's so weird, right? 15 times 0.8. It's going to be this plus this minus this. Dude, didn't give us enough room. All right, now I need to do my D's. And I have a building for 40 and goodwill for 102.5. And I have the investment for 114. The NCI should be 28.5. Right, and then I think I just have the amortization, right? Depreciation. That's going to be depreciation expense. And I'm also going to have a retained earnings of the parent, retained earnings of the sub for the previous, let's say 4,000 is yearly. So it's going to be 4,000 times 0.8, 4,000 times 0.2, and then it should be accumulated for 8. I think that's it. Is that it? I hope that's it. Okay, let's put them in. I'm going to freeze my panes as usual. I'll make this big. $20. 20. I'm not putting my keys. I'll probably regret it, but anyway. Right, and 4. $80, $96, and 12. But I'm not the right thing. 80, 6, and the 12 is over here. So weird, right? and 164 to the investment. $28.5. Get that whole entry. Did 114. 14. Depreciation expense for 4. Just going to put it in line with the expenses. It's all right. Parent retained earnings gets 4. Sub gets 8. And accumulated, well, the sub got 800. And accumulated gets 8,000. All right, let's see if I got it. Oh, it should be the 350. So what did I do? Here's the building. Here's the investment. Good ones. 1025. 80, 96, 8. Oh, that's not what that should be. That should be 3,200. Okay. All right, then we just have to finish it out. And the split is up here. Gosh, what did I do? 4,277.8 is what it should be. Yep, okay. That goes to there. That goes to there. All right, the NCI. Gosh, this is going to be so confusing because retained earnings is not normal. The root of them. So 15,000. They got 24/7. So 15 is going the wrong way in the first place. So you need to make that a negative. There you go. You got to make this first 15 minus because it needs to end up being 24/7. But I'm like super confused. No, I'm not. Okay, so it's a credit of 28.5. It should be a negative. These need to be negative. You need to do these as negatives. Okay, so I'm going back to doing it how I was doing a second ago. All right, so 15,000. I'm gonna add it because it's a debit. Then I'm gonna add the 800 because it's a debit, and then I'm gonna subtract the 12 and subtract the 28.5 because they're credits. There, that's what it should be. Atlanta. All right, and then the dividends need to come over the remaining dividends. So we have 5,000 minus 4. 5,000 minus 4. There. Okay. Now add this up. So over here to do this retained earnings. And then did they pay any dividends? Yes, this 10 needs to come on over. Just there. Now we're just gonna finish this stuff out. Just copy that to wherever it can go. The only place it can go, I guess so. Right. Investment zeroed out. That's always good. That formula needs to come in. So we don't need to do anything with that. Just need the common stock here. All right, I think that's it. Sum it up. We'll find out soon enough if that's it. Yay. Okay, y'all can do the financial statements from there. They're pretty straightforward. To do the statement of retained earnings though, for the NCI, you have to have two columns to do the statement of retained earnings. All right, one for the NCI and one for the controlling. The NCI is going to start with this 15,000. All right, at 20%. So it's just going to start with 3,000. And then the parent starts with the 499.8. All right, that's it.